Hi everyone, this is Knowledge Topper, and in this video we are discussing about a topic that is related to accounting, and that is creative accounting. I will explain you the definition first, then we will look our example, so your concept should be clear. So let's start it. As written here, creative accounting is a process that consists of accounting practices that are legal, but it contains certain loopholes by which the management of the company or the accountants of the company use their knowledge of accounting rules and standards in order to manipulate the minds of financial statement users by changing the results and figures reported in the financial statements to falsely present the better image of the company. It is just the definition. The main thing is how creative accounting works. Creative accounting works when companies wants to manipulate the minds of its financial users. You know that mainly financial statement users are investors and shareholders. What companies do is companies changing the results and figures in order to show a stable and stronger financial health of the company as compared to their competing companies to attract investors and to retain its current shareholders. So what companies do is companies often choose creative accounting when companies wants to manage earnings, or mainly you can say that to keep debt off the balance sheet, like to attract new investors and retain its current shareholders. Sometimes companies getting caught in doing creative accounting, and this leads to poor image and bad reputation of the company overnight. However, there are some management teams who are willing to run that risk, and when companies becoming successful in doing so, it can lead to higher bonuses for directors. It can lead to convince lenders for getting loans, as well as it can also increase the overall valuation of a company. So this is how creative accounting work. Now we will look at the example. Our example is most important and it can help you guys to understand creative accounting betterly. So this is the example for you guys. Now suppose that there are a company whose name is ABC Cosmetics, and they want to sell one of its warehouse, and Mr. Taslim, the accountant of ABC Cosmetics, checked the fixed asset of the company and find that they disclosed one of its warehouse at 30th June 2019 at 10 million, which is mistakenly, and currently the market value of that warehouse is 100 million, as you can see on your screen. Fixed asset is warehouse, and it is recorded as 10 million, which Mr. Taslim believed that he mistakenly recorded as 10 million. However, the market value is 100 million, so it should be recorded at 100 million. So now what Mr. Taslim will do, Mr. Taslim started thinking that if they sold that warehouse now, they have to pay tax on 90 million gain, because the difference is of 90 million. As you can see, 10 minus 100 million is 90 million, and if they can sold that warehouse now, they have to pay capital gain tax on 90 million, and we assume that in our example the capital gain tax rate is 20%. So if ABC Cosmetics sold that asset now, that warehouse now, then ABC have to pay 18 million in tax, like 90 multiplied by 20%, which is 18 million in tax. On the very next day, Mr. Taslim heard the news of amnesty scheme. You know, there are a lot of amnesty scheme used by government to attract fraudulence and correcting errors, to invite businesses and individuals person to show all of its asset correctly and fairly by paying only we assume that government introduced a scheme for fraudulence to pay only 2% tax, or for correcting errors to invite businesses to record its to record the value of its assets correctly. So government introduced amnesty scheme, and companies can pay 2% tax and can easily avoid taxes. So what Mr. Taslim started thinking of something we call creative accounting. Like what he is thinking is avoiding a capital gain tax, and for that he used the amnesty scheme provided by government by paying 2% of tax, and declared that 10 million amount of that warehouse was mistakenly recorded as an error. Tax department corrected that error and charged 2% on 90 million, which is 1.8 million only, as you can see on your screen. So by doing this, ABC Cosmetics avoided the tax of 16.2 million. and as per IAS International Accounting Standards 8, Mr. Taslim used the method of past period errors and retrospectively thinking to correct the comparative year amounts. And what he decides is that for the very first next year he will sell that asset for rupees 100 million, because he already declared that warehouse and by paying 2% capital gain tax. So what Mr. Taslim will record in next year is disposable proceeds for selling the warehouse, which will be for 100 million. And as we know that they already showed that warehouse which will be for 100 million, the capital gain tax on that asset will be recorded as 0, and hence Mr. Arif will be successful in avoiding capital gain tax. This is one of the example of how companies and businesses use standards to manipulate results through creative accounting. So this is it for this video. Hope you understand about creative accounting. I already explained you this with the help of an example, and it is a very good example. If you didn't understand that example, you can watch it twice so you can easily understand the concept behind this. So this is it for this video. If you like this video, do subscribe to our channel Knowledge Topper, as well as like our Facebook page, and do join our Facebook group as well. Thank you so much everyone. It's time to say bye bye.